A rough day on Wall Street, the stock market plummeting today, ranked as one of the worst of the year. President Donald Trump blamed the Federal Reserve, saying the Fed has gone crazy. Money experts say the president went too far with these comments. KCAL 9 political reporter Dave Bryan is live in the newsroom for us. Dave.
Crystal, a highly respected California government economics expert I talked to today, said the president's attack on the Federal Reserve was unnecessary and dangerous. And while the Fed certainly gets plenty of criticism from time to time, it is widely regarded as one of the most stable economic institutions in America. Appealing to his cheering supporters at a midterm campaign rally in Erie, Pennsylvania Wednesday evening, President Trump made the case that his handling of the economy has been a blessing for America.
The unemployment rate has fallen to the lowest level in 50 years. It was just announced that manufacturing confidence is at an all-time high, historic.
But when the closing bell mercifully rang out at the New York Stock Exchange today, the cheering was for the session ending after the biggest one-day decline in nearly 8 months. The Dow fell more than 831 points. That's more than 3%. Investors are worried about trade tension with China and the impact of rising interest rates. President Trump blamed one of the country's economic pillars, speaking to reporters after he arrived in Erie, slamming the Federal Reserve, which he claims has gone crazy raising interest rates.
No, I think the Fed is making a mistake. They're so tight. I think the Fed has gone crazy. I really disagree with what the Fed is doing. It gives you a lot of margin, but I think the Fed has gone crazy.
Christopher Thornburg, one of California's leading economists and the founding partner of Beacon Economics, an independent research and consulting firm, told me in a Skype interview that the president is not alone in feeling that the Fed has gone too far in raising interest rates.
I have some sympathy with the view that the Fed's actions over the last year or so have been excessively aggressive in terms of raising short-term rates.
But Thornburg also says it was the economic policy decisions of President Trump and his administration that ultimately caused today's stock market crash.
The economy's been stimulated, the government's borrowing more, and all that is largely responsible for long-term rates going up. It's not the Federal Reserve. What you have here is a very characteristic ploy of the president, which is do not, if you will, take responsibility for a market condition that your actions have created. Rather try to find a scapegoat. In this case, it's the Federal Reserve.
Thornburg says it's not unusual for a president or other elected officials to criticize the Federal Reserve, but for the President of the United States to accuse what Thornburg calls the most stable institution of economic policy in the country of going crazy, that's not going to help things.
For the president to do this, that is really dangerous, unnecessary.
And the president's scathing remarks aimed at the Federal Reserve also raised the question of whether the tradition of independence for the Fed will be honored by the Trump administration. The 7 members of the Federal Reserve Board are nominated by the president and confirmed by the Senate, and the chairman is then selected by the president. But there's also a long tradition of hands off the Fed, despite, as we mentioned, the occasional criticism by the politicians. Juan, back to you.